Hello, and welcome everybody to our webinar. Thank you for joining from all corners of the world and taking an hour out of your time on this Wednesday to learn about investing as a form of activism. So today we'll be talking about investor and shareholder activism and discussing how individual investors can drive positive change. You will learn what investment activism really is, what kind of value it can bring to the world and to the companies, and what exactly you can do to turn your investments into a sort of voting mechanism that can positively impact not just your wallet, but also the world. So I really hope that this will be useful for anybody who has maybe invested before and is considering to make their investments greener, so to say, and are thinking to explore the additional power that their investments can bring to them in decision-making processes, and maybe also people who have never invested before and really want to make sure that they're making the right choice and do the research properly. So no matter which group you belong to, I'm sure this will be a useful webinar for you today. And before we start, let me briefly introduce myself and our amazing speakers. So my name is Olga Rabo, and I'm a marketing lead at Cool Future, and I will also be a moderator for the webinar today. And we have two amazing speakers and one extra panel guest to join in, which I'm all delighted to introduce. We have Baart joining us as one of the speakers. Martin is a co-founder of ecoligo. This is a crowd investing platform for renewable energy projects with a focus on developing and emerging countries. Prior to founding ecoligo, Martin spent about 10 years developing solar projects. And it was then when he understood that even if people acknowledged the benefits of solar, they still lacked instruments to finance solar projects. And this is how ecoligo came to life. So in 2015, he founded ecoligo, which is now a leading solar energy provider in 5 countries. And on the other side of the speakers table, we have Aejmelaeus. She's a top-ranked equity analyst, investor relations officer, and a financial markets expert. In addition to all of that, Kia has also completed a climate reality leadership program where she was trained by former US Vice President Al Gore. And prior to that, Kia was instrumental in reforming the investor relations function at the world's most sustainable listed grocery trade company that had over 50,000 shareholders. Last but not least, we also have Matti Rönkkö joining in for the panel discussion. Matti is co-founder and CEO of Cool Future, a Berlin-based startup that develops impact investment solutions in order to fight climate change. Matti himself is a seasoned entrepreneur and a company builder. He's a former CEO of Nosto, ex-Rocket, and he's also an avid hiker. Thank you all for being here today. I'm really excited to dive into this topic with all of you. And so before we start, let's just have a look at sorry about this. So these are all the speakers yet again. And before we start, let me just dive into the agenda because we have quite a packed schedule and we need to cover a lot in an hour. So during the next hour, you will learn, you will get an introduction to investing activism. We'll discuss what it really means, why it matters, especially now in our day and age. And next, we'll take a little deep dive where Kia will talk about what really it means to be a shareholder in a publicly listed companies, what kind of power it really gives you and where exactly it positions you, and how exactly then you can use your voice to drive change. Thank you everybody for joining in the chat. Yes, you will have an opportunity to chat a little bit later as well. I'll dive into this. Coming back to the agenda, Martin will finally then touch upon the untapped potential and opportunities of the unused capital in the world that people can use in order to avoid emissions and make the world more sustainable. So this is going to be our main part for the main 2 speakers. This will be followed by a panel discussion and a Q&A. and we will answer all your burning questions. So this is exactly where chat function comes in very handy. If you have any questions during the webinar about investor activism or anything that crosses your mind, really, you can either use the chat function, or better yet, the questions functionality, which is close to the chat function, because then you can also upvote the questions, and we'll try to tackle the most popular ones in that order. But of course, we'll try to answer as many as possible as the time allows. So if this sounds good, let's start. So first things first, before we talk even about investment activism, it is important to understand how activism and sustainability really fits in the world of investment in the first place. So now, no matter where you look, really, and I guess especially now because of the pandemic, climate change is the center of every conversation. It's on the tip of everybody's tongues. So we can also see that this is reflected in the way people invest. So if we look at the numbers from 2012 to 2018, total assets in sustainable investing have doubled. There were just over $30 trillion in total in 2018. And in just 2 years, this number is $40 trillion, which means that sustainable investment isn't just a growing trend, it's becoming a shift of a mindset, it's becoming a shift of a mentality. So it's important to acknowledge that when you invest. Which brings us then to activism as such, right? So what is investor activism? In layman terms, investor activist is really anyone who makes investment decisions as a form of voting that determines the change they want to see in the world. So somebody who really takes the research to dive into investing in truly sustainable assets, right? So whether you bought 1 share or 2 shares, you're still an investor activist. But what happens if you don't have that much money, right? Because you can also be a shareholder activist, so you can own a more significant stake, let's say 5 to 20%, and you can use that to influence how the company is run by putting pressure on the management, right? So there's a little bit of a differentiation between shareholder activism and investor activism, but no matter which group you belong to, you can still drive a lot of positive change in the world. I hope this brief intro made sense. I'm not going to speak for too long anymore, as I'm passing the word to Kia. So Kia will talk about what investors can really do in order to drive positive change in a company.
Thank you, Olga, and hello, everybody. It's really nice to be here, and I'm super excited to join. And greetings from Helsinki, Finland, where I'm currently based. I think in brief, the answer to this question is that yes, investors can use their voice, and hopefully at the end of the session, we are all encouraged to do so if we haven't done it already. I will share my insights mainly from a stock exchange listed company perspective. But let's first look at or set the stage, look at the basics. The company and its key stakeholders and the different roles and responsibilities and how power is distributed. The company is, of course, owned by its shareholders, and they elect the board of directors. The board has been delegated a lot of power in that it's responsible for setting a strategy, governance, all the control processes needed, and very importantly, in appointing or, if necessary, firing the CEO. The CEO, again assisted by his or her management team, runs the day-to-day operations of the company and takes care of the strategy implementation and sees that all the targets that have been set are met. And the CEO, together with the management team, prepares and presents most of the material that the board bases their decisions on. And I think we can all agree that the best companies attract the best employees or talent. On the other side, it's quite evident that you have the customers or end consumers, and they are important in buying the products or services that the company produces. With the pandemic, I think we have seen that suppliers and supply chain and the reliability of the supply chain is very important. Government and regulators set the framework for operations, and then looking at the media, I think in addition to traditional media, social media and influencers there, as well as different interest groups, may help informing the public opinion. And then I think communication is a glue to all of this. Companies, I think, have the responsibility to communicate actively about their performance and plans and ambitions for the future. And also it's really important to get feedback in and understand what your stakeholders think and what they're interested of. Turning over to this slide, if you look according to the law, the company's purpose is to generate profit for its shareholders. While capitalism, I think everybody agrees, has long created widely wealth and prosperity, the criticism that we now face is that the search for profit has in some cases gone too far. The focus has been on short-term and maximizing profits. So therefore, I think currently it's capitalism is going through a rethinking, and also the company purpose is taking more of a multi-stakeholder approach, which then takes into account not only profit, but also the impact a company has on people inside and outside of the company, as well as the surrounding environment. I think boards and management are currently expected to balance all these stakeholder groups and think more sustainably and also more long-term how they can create value, and also how they can become better equipped with dealing all these challenges. In a way, I think this does not contradict with investors or investing, as currently I think the new thinking is that optimizing risk, return, and impact will lead into superior returns. If we then look at the different channels to use if an investor wants to make an impact, I think easiest and common is the annual general meeting. That's only directed for shareholders, and this is, as said, the most commonly used channel, and also the company's highest decision-making body. To be able to attend, as a first step, you have to become a shareholder, and then attend and be active at the meeting, and also vote if there's a possibility for that, or voting comes actual. Most of the decisions at the annual general meeting are taken with a simple majority. So that means just over 50% of the votes can decide. Looking at the individual investors or private investors, household investors, often they hold very small stakes, and the distribution or ownership is widely distributed. So in truth, most of the decision making is driven by institutional or professional investors, institutional investors and their representatives. For example, often the largest shareholders here in the Nordics, 3 to 5 largest shareholders, form a committee that nominates the board members or puts them up for election. And one of the most important tasks, I believe, an annual meeting decides is on who the board members are, as they hold so much power. Also, a bigger investor alone or together with another one can make in advance proposals to the AGM, or then if needed in between annual general meetings, convene an extraordinary general meeting. And this usually requires a 10% holding. So I think it's evident that size does matter. The more shares you have, the more votes and the more power you have. Then looking at the different other channels, I think for institutional investors, the private engagement or private meetings, that's the most, or has been and is the most preferred and popular channel. So meetings with the senior management, sometimes board, to discuss themes and influence. Usually there's a selected theme, or then even a wish list of improvements that the investor brings forward. If these are successful, you can drive positive change and then also make a big societal impact and unlock the value potential there. I'd say that these contacts, sort of in an engagement way, I think they have increased in the recent years. There are different themes I've been involved and colleagues, often in governance-related themes, which would then could include board nomination processes, also looking at the board or understanding the board composition, independence, skills, and diversity of the members, and then compensation and target setting and disclosure of these different factors. So I think, and then looking at the way these discussion or the dialogue with investors and companies can take long time, several years, and if there is a wish list, I think many times companies may start with some of the low-hanging fruits and fix them, and then move or work more towards the challenging issues. And looking, of course, if an investor doesn't receive a response or commitment from the company, they have alternatives to put pressure, threaten, in a way threaten. Usually the discussions are quite constructive, but threaten of voting against certain proposals or putting forward a proposal themselves to the AGM. And ultimately, of course, it's selling the stake and taking the money elsewhere. As I think, Olga, you mentioned the public engagement, that's a channel that's usually associated with opportunistic activists that drive aggressive, sometimes hostile public campaigns and buy stakes into the companies, wanting to have a seat on the board or then they have an agenda of a merger or takeover or split and cashing in on a turnaround hopefully fast. These are more seldom, and as mentioned, I think the so-called traditional professional or institutional investors, they have become more vocal privately and also publicly. So as mentioned, putting in proposals, voting against, for, and also I think recently you see a lot that investors report on their own engagement initiatives and results. So moving on, looking at this slide, I think even the bigger investors don't always get results that they want on their own. So collaboration with other investors and networks is, I think, on the rise. Here I have taken an example of the Climate Action 100, which is an example of a large-scale investor collaboration that was set up a few years ago to get the world's most carbon-intensive companies to change. It has currently over 500 investors with assets under management. I had to write it out, over 50 trillion that have signed on, and this represents nearly half of the world's professionally managed money. So there is a lot of power in there. And I assume that the benefits for the investors is to scale resources and share costs, because engagement is not cheap, and increase the negotiation power. Coming to an end, I just wanted to take already here a few recent outcomes following investor collaboration and also engagement, and especially on climate issues. The first one is from last year, the climate resolution that almost got 100% of the votes at the BP annual general meeting. So now the company is required to disclose on how its business strategy is consistent with the Paris Agreement goals, and also to report on their progress annually. Another example is investor engagement that led to Unilever making an ambitious commitment to rethink their plastic packaging so that it becomes more reusable, recyclable, and compostable. And here they have committed to halve their use of virgin plastic and also come down with over 100 tons in absolute plastic use, and also help contribute to the circular economy. So I think this was my intro to the topic, and I will now hand over to Martin and look forward to the discussion and questions that you may have. Thank you.
Great. Kia, thank you very much for this insights, especially on shareholders and investors and the bigger picture of things, how corporates are changing their behaviors, and how that is also, or how that also can be seen as activism. I want to take a little bit different view here and talk about the opportunities that we have as individuals, and talk about the impact we can generate with our decisions when it comes to our capital. I think we all know that when it comes to consumer behavior, especially in recent years, we've seen a lot of changes. And the reasons why we see, for example, vegan products in every supermarket these days is because customers have demanded it. The same for sustainable fashion, the same for biological fruits and vegetables, and locally produced food. That is all a consequence of our behavior. And I think what a lot of people are not aware of is how much our behavior when it comes to financial decisions can actually also drive impact and can actually change the way that the capital is used to achieve our goals, whatever they may be when it comes to impact, with our decisions. So when we look into Germany alone, we have around 2.5 billion euro on German bank accounts by Germans that is not used. That is money that people just have on their bank accounts. It's not on a savings account. It's not invested in shares. It's not invested in any other financial product. It's basically just sitting on our accounts. And in today's low interest rate environment, we probably are not even making any money with this. We're probably losing money with this because inflation is higher than the interest rate. So that capital is unused capital. And on top of that, that we have sitting on our bank accounts, there is another 2 to 9 billion euro sitting on bank accounts of people who passed away. Now that is a tremendous amount of money that is not used for any good. Recently, if you were watching the news in the second German TV, the ZDF, there was actually a news report on this unused capital from people who passed away, because there is an initiative from Berlin actually that we use this capital. And instead of waiting 30 years until the banks can access it and just incorporate it, we do something good with the money. And I think it's really, really important that we know about these dimensions of the capital that is currently just unused. Yeah? And that's just thinking about Germany. I think if we talk about the EU, the number of money sitting on bank accounts is something like 16 to 18 billion euro. And obviously, we can do something with that money. We can actively decide to not just have it sit on a bank account, and rather do an active decision of investing it. Now, I do believe a lot of people are not doing this for a number of reasons, but some of them may be that they're questioning whether the impact they could possibly do by changing maybe their bank to a sustainable bank, or by making an investment into a sustainable energy project, or into maybe an ecological startup or something else, actually drives impact. And the question of that is really important, because the answer to that is yes, you will drive impact with your investment decision. And I obviously have used an example here of the projects that we publish on ecoligo.investments for investing. And I think people need to understand that your financial decisions can have a significant impact of changing the world in whatever way. So we have this example, and this is on average across the projects that we have on our platform, that with 10,000 euro of investment, you're saving around 1 ton of CO2 emissions. On top of that, you actually also earn 5% interest rate. And that power of money, especially in our case, you're supporting a lot of things besides obviously generating capital income and saving CO2 emissions. You're supporting solar companies in emerging markets that are building these projects and therefore have a job during that time. You support the local companies that are benefiting from the solar energy because they have less cost and can increase their impact in emerging markets, hire more people, and so on. And lastly, you're actually driving a global consciousness of people that it's possible to make a reasonable financial investment that also benefits the planet. I think oftentimes people are actually not aware that it's possible to combine the two, and they feel that yes, if I do something good with my money, I actually don't earn any additional money. And obviously, by the natural interest of human behavior, we want to do that. We want to also earn money with it, because we can then also increase our impact, right? The more money I have, the more I could invest in more projects. And in this example that I used from the page before, with the 2.5 billion, we could avoid something like 250,000 tons of CO2 emission, and obviously generate an interest rate. And that equals to what 28,000 Germans are emitting per year in terms of CO2 emissions. So what we can see in this little example, and there are many, many other opportunities out there when it comes to sustainable investing, is that I can have a direct impact with my behavior. And I think something I haven't mentioned, but that's equally important, is the capital that you use by investing it into such a project is actually not used by your bank to fund something else, to fund a coal-fired power station or an oil pipeline or any other activity, because they don't have access to that capital because it's in this project. So it has a secondary effect as well. And with that, I'm actually also at the end of what I wanted to share with you, because I think that is enough food for thought to really start the discussion later on and see how can we actually make sure that we can convince others to use their capital, to use their financial decisions, to drive activism into a better place for all of us. And with that, I'm actually handing back to Olga.
Thank you for this very interesting points of view. This was our main part, everybody. Again, if you have any questions, please, I already see some coming in. Lovely. Keep them coming in, because we're starting our panel discussion and a Q&A. So to start off, I guess I can summarize the entire presentation right now with just a few words. It is indeed so that your money does have power, right? It's I think Kia basically outlined the power that you have as a shareholder. And Martin, as you also said, how much you can drive there. But then I have a question. How much power do you then really have, like if you are a smaller investor, right? If you don't indeed have many shares, as Kia outlined in her part of the presentation, that you can just put more pressure on management. As smaller individual investors that don't have enough money to invest, do you still have the power to drive change or not? Or is it just a fairy tale?
Should I can jump in here, since I've been quiet in the sidelines with the smarter people speaking. I think the first point here is actually like kind of what I think Martin was also referring to, is that your money, the crazy thing with the financial system and your money on your bank account or your savings account and so on. I mean, somebody is doing something with the money. So if you think that your money doesn't have a power, then what you should think, like you don't have enough money saved so you could invest and actually have a say on what the company is doing. What you need to understand that if you have money on your bank account, somebody is doing something with that money, and you have absolutely no control of that. And only way to be an activist with your money outside of consumption is then to start investing into something or support projects, for example, or companies in some way. So the first part of the answer is like, can an individual investor have an impact? Is that every euro or pound or yen or whatever currency you have in your bank account has an impact. And only by starting to do something, you can define if it's positive or negative impact. And then we get to the next stage, which is kind of choosing the right investments, different products, different projects, where you can actually drive the impact. But the starting point is that if you have money, it will have some positive or negative impact.
Anything to add, Martin, maybe?
No, I think Matti actually summarized it pretty well.
I could if you are an investor looking at now again listed companies and a small investor with a small stake, one share more 100,000, I think you should, or I would prefer at least that you would be active and attend start from somewhere and go to the AGM, read all the material, it comes in advance, prepare a couple of questions or comments. That's really your, like as a small investor, you seldom get to see them or have a one-on-one meeting with the chairman of the board or the CEO, but that's really your opportunity at the AGM to meet all of the company leaders. So and also to ask questions that you want to have answers, and also consult or suggest or challenge management. So I would go there and use that opportunity, ask something smart in a way that might also benefit everyone else who are present there, and relating maybe to the future value drivers or the big picture. Because I think, or I know that your comments or what you ask at the meeting, and everything is, by the way, also recorded and noted, and you get minutes and you get voting results and so on afterwards. And even like a small against vote or several others, or the questions that you ask, especially if they are challenging, they are noted. You might not get or most likely if you suggest something, you won't get it through there. It's quite a formal setting and formal voting and so on, but it plants a seed in a way. And maybe next time something, or depends a little bit how you communicate, but in any case, it will be noted. You will have a voice, even with one share. And then, of course, afterwards, if we once again come to live settings, then it's you can have the discussion with the management team, with the board that are afterwards, and also share your ideas with other shareholders. Why not even post something on the social media and create influence? So even as a small shareholder, yes.
Maybe if I can comment to what you just said. I was on a sustainable investing panel last week, and another panelist there reported of a private bank that has decided that with their capital under management, they're only going to support ESG projects going forward. And he asked them, oh, what made you make this decision? And they said, oh yeah, we had a lot of customers call us and ask for this. And he said, oh, how many customers called you? And they said, 3. So think about that. If a bank can be influenced by 3 customers just calling up the bank and saying, hey, I think you should invest in these projects, how much power you actually have. Because most likely no one else calls them. So if you're the only one calling with a demand, that has a big impact. Yeah, and we shouldn't underestimate just the power of influence you have by just demanding something.
The power of asking, as they say, right? And then it kind of brings me back to your slide, Kia, when you also were showing the position of you as a shareholder in the company. You're actually above the CEOs, right? So we as investors, as shareholders, we have so much more power than we know, but yet we're not actually using that voice, right? People don't know that they have this power. People actually don't know that they can drive this change. What, in your opinion, needs to change in this mindset? How do people should start looking at the whole thing differently? Matti, if you want to jump on.
I think everybody else is muted, so does that mean that I'll go first? I think it really starts from the thinking that, like, what are my values as an investor? Like, many people have values as consumer these days. So you support certain brands and products and companies by buying their products, right? In the same way, I could ask, why does anyone believe that if they drink 1 cup of coffee per day, and they decide to buy fair trade coffee, is that going to change the industry? I think the same goes here with our investing. We need to start. I think investing starts from values these days. You need to set up your values and the causes you want to support, and then you start actually making investment decisions based on other metrics. So I think this is kind of the key starting point, and then you're completely right. And what Kia was saying, as a shareholder, in the end, you kind of hold the ultimate power. And I think Martin's example here also was fantastic. That many both asset managers, fund managers, as well as the companies, they actually listen to the customers and the investors. And I think I was discussing this with Kia earlier on this week, that, you know, if you think of AGM, that every comment, every opinion there is recorded some way, and it's considered some way. So again, like, you need to set up your own values, and then you need to start supporting the companies or projects that you want to go for, just like you do with your consumption decisions, and you can hold a huge amount of power actually. And then of course your example can start a bigger movement, like it can again on the consumption side as well.
Yeah, there's actually a question from the audience. How can you be 100% sure that the company really wants to drive positive change, and then this is not just another greenwashing communication?
That's a good question. I think by really looking into whether or not that company is actually just talking or actually doing something, right? So I always take the example of the big oil majors. I mean, they all have these fancy advertisements about becoming green and whatnot. As long as they continue exploring oil, they're greenwashing, right? And whatever they offer is not really supportive of what they're talking about. And the same is true for financial institutions. Deutsche Bank is a good example. Deutsche Bank always has these green, friendly, family-oriented advertisement placements, but in reality, they're one of the biggest funders of defense industries, of oil and gas industries, and so on. And obviously, it's not super easy to find out, right? If you're not an expert of the area you want to put your capital in, then it can be tricky to find out. But fortunately enough, there is more and more independent, let's say, watch groups, organizations that make it transparent and that make it quite visible as to whether or not you should invest your money into a certain company because of their activities. Mm-hmm. And what Kia has said, I think, is also relevant, right? I mean, before the AGM, a company is obviously also releasing the last year's financial statements and so on, and you find a lot of information in there. So companies nowadays know that if they are not transparent about it, it can be assumed they're not doing something, right? And therefore, when they do something, they put it in there because they know that it will also support investment decisions.
Good comments. That's definitely something to watch out, because everybody is talking about how sustainable they are and ESG and this and that. And I think, like Martin said, I think reading, informing yourself, asking questions, comparing with the other companies on the sector. Like when I was an analyst, this doesn't now relate to greenwashing, but trying to figure out that what is the growth rate for sporting goods, for example. If everybody said that, yes, we intend to grow 10%, and you see that the market was 5%, somebody it doesn't add up. But asking a lot of questions and comparing. And then when I started out, it was a lot, sustainability was a department doing reports and communicating, and then business was run separately. Of course, that's a good starting point to start that these sustainability issues need to be integrated into the strategy and everyday operations that you have in the company. Of course, what disclosure is quite important so that we know that what is actually really done. Has the company set some targets on for example, alignment with the Paris Agreement? And then I think especially you would stand out and really show that you mean serious business by if you include the sustainability targets also in management compensation or remuneration, and at least that's a good starting point, as well as also I think disclosure plays a big role. That is the company able to talk what they are doing, and as said, report the outcomes and results, and also just describe that what is material and what is of importance to the company.
And what about allowing transition? Because there's still a lot of, I'm just thinking of Shell and the recent backlash it received, and it is still trying, right? Shell is still trying to do something, and Shell still is out there, whether we like it or not, right? It still exists and takes space in the world. So can we still invest in a player like this that is in transition, or should we prioritize projects and companies that are already green, so to say?
I think I can start and reflecting also what Kia said. I think we need to take a close look at the data because like I think the things that Shell has, for example, done, they are prime example of greenwashing, as Martin said before, and the devil and the answer here at the same time is in the details and the data. So if a company is clearly communicating reduction on the emissions, reduction on the use of fossil fuels, things like that are being audited. Ideally, they are also part of some third-party frameworks, such as science-based targets or something similar that we and our team also looks at very closely. Then we are talking about true transition. And in my opinion, most of the industries out there, I mean, we, for example, at Cooler Future, we wouldn't invest in an oil company in general. It's just out of completely our scope. But I think most of the industries out there, actually, we kind of need, in a way, in the future as well, to keep the economy running, and therefore I think we should invest in transition. But then we again get to the data. So are the targets aggressive enough? Are they doing enough to actually reduce the emissions? That's the bigger question. Like if somebody's starting the transition a little bit late, but they still can commit to, they can be Paris aligned, and they are committed to other type of frameworks, and they have really aggressive plan and clear plan how to reduce the emissions. I would at least be fine with supporting them. And given also the overall business model and the business that they're in is somewhat sustainable, so it's not drilling and burning oil basically.
But the Shell example is actually a really good one. They had a few years back promised to invest something like 6 billion into renewable energy projects, electrification projects, ventures, and so on to support the transition. And basically at the beginning of the year, they had done a third of that number. So they invested a total of 2 billion over the past 4 years instead of 6. And then you may say, oh yeah, well, awesome, at least they invested 2 billion, right? But for a company that makes 470 billion euro in revenue, what's the 2 billion? Like, put it in perspective of what they could have done and then what they are doing really. And then that gives typically a good picture of a company, in addition to have they kept with their promise, right? Like I totally agree. Some companies have joined the game really late, and therefore they have to do a lot to become more sustainable. And if they make promises and they stick to it, or maybe even overachieve, okay, at least they're making the pathway. But for companies that consistently fail to actually meet their promises, and then what they're spending is actually so little of what they could be spending on the transition, I think I wouldn't invest.
Yeah, I think it's a good comment. Let me add to that there is obviously companies out there who have said that we will do the transition and say that they are, for example, Paris aligned. But what does it really mean? Because I think we should keep tracking that on annual basis or even quarterly basis if they actually on the trajectory to be actually aligned. So that's what I mean with looking at the data. There's a big difference in terms of saying that we do things and then actually having the data to back up the thing that they are actually doing.
I don't have much more to add, but I love the comment on data. And I think I was referring to that, what Martin said, but forgot to complete the idea that I think when you talk about environment and sustainability, you should always put the numbers, hopefully in absolute terms, and into context, or what is the bigger picture. If you just throw, something 5 tons, 100,000 tons, something, but not many of us know, is it much or little, or, what is the impact and how does it compare to other companies? So I think putting into context and, seeing the big picture again.
Yeah. And if I add one more thing to Kia's point is also, and to Martin's point as well, it's obviously what are you reporting all the data and all the emissions? This is another thing. So there's tons of companies out there who only actually report fracture of the emission data. If you look at the different scopes of emissions, for example, and this is also a problem in the fund industry, that when funds are being sold as with a certain footprint, they don't at least openly communicate what scopes of emissions are actually calculated on the footprint, which is quite misleading as well. So again, power is in the data. And regarding the questions on layman who doesn't have the expertise to analyze companies and their footprints, I think like Olga answered, CDP is a great sample. Another point to that is that generally if a company has the data and they are doing aggressive reduction on their emissions, don't worry, they will make big noise about it. So you will definitely hear about it. They're not gonna put it in the small print for sure.
That's very true. As Martin also pointed out in the beginning, if they're not talking about it, they're probably hiding something. So if it smells a little bit fishy, so to say, it's probably so for a reason. So information has to be accessible easily and transparent to anybody out there. So if you're reading and there's information missing and it's hard to find, it doesn't look good. And I have another question, and I would like to play devil's advocate here a little bit. So let's say, because Martin, you did mention like some of the companies, they do come into this sustainability game, let's put it this way, a bit too late. Why is it so? Because it could be, is it so that if a company has been performing well financially over the last, say, years, it's very hard for them to catch that incentive into changing their business model, right? To all of a sudden, all this extra pressure, why do that? So what can be done, like, to give an extra incentive for these kind of companies that are so financially driven that you do need to change them as shareholders, but they're just being a bit stubborn or late to the party?
Yeah, I mean, I think it's probably consumer behavior that we can change. I mean, the oil and gas companies are a prime example, right? I mean, majority of the oil is used for private transportation, and if I don't use a car, I'm not going to support these companies. That's obviously not possible for everyone, but I think there's so many different reasons why a lot of the companies are joining so late to the game of becoming more sustainable. It's also a matter of us not being in a position to remove all those reasons, right? I think if they make the move to become more sustainable, then we should support them and actively support them. And the same counts for, if you don't like Amazon and how they do business, then we should go to the local shops. Okay, right now in Corona, it's a bit difficult, but that really drives change. And especially if I do it and I show my friends and family it's possible to avoid this, avoid doing that, avoid buying here, something, it has an impact, and much bigger impact than we all think, because we actively influence others in their behaviors. But it's a very broad question, so maybe the others have some views on that as well.
Kia, if you would have something to add, why do you think some of the companies are so late to the party?
Hate to agree once again with Martin, not to disagree, but I think the consumer-facing companies, I think they, just like Martin, I must echo, they might be a step ahead because of the consumer demands. At least in my experience, also before investors have come really active, it was sometimes the big B2B customers that demanded a change at the company because their customers, the consumers, demanded change. So it sort of comes from consumer or customer behavior, the proactiveness in a way. But I think it would also be helpful. I'm very happy that during the years, I think the whole sustainability discussion has developed, not only looking at it from a risk perspective, but also to the opportunities and benefits perspective. And I think it's very good to remind sometimes of the, as said, the benefits that sustainability or climate change, driving climate change can bring, like mentioned already, the consumers, the talent, also being more resilient on future shocks perhaps, and seeing growth opportunities, and this will reflect positively in valuation and also the cost of capital. So I think maybe also reminding of the opportunities that sustainability brings.
Yeah, it was somewhere, was it by the Financial Times, written recently that actually sustainable funds outperform traditional funds. So those sustainability is profitable, and this is also something that people don't really know right away. They are afraid often, you read it online often as well, that they are afraid to lose money if they invest sustainably, but what they don't catch is that actually if you invest sustainable, you probably get higher returns anyways, because of all the reasons that you mentioned, Kia.
It's the biggest change for most of the companies, big companies out there, in terms of just pure risk, physical risk, and risk around all the stakeholders that Kia mentioned in her presentation, including, tax and regulation and so on. So it's even if there was a company who would not believe at all on climate change for whatever reason, they better be prepared for that now, because otherwise it's causing a huge risk factor for them. And I think be institutional or private investors will vote them out quite soon.
Yeah. There's a question from the audience. It's a rather general question. Maybe one of you could still answer. What do you think about socially responsible investment, ETFs, impact investment, or would you rather invest in companies individually?
We're no financial advisors, or at least me not. So I think I personally would rather invest in a company individually, and would do so for the following reason. If you invest in a company directly, you can be sure that you're not investing in a portfolio of companies where, for example, just a certain percentage is actually socially responsible. So a lot of these green funds that we see, I'm not sure about the ETFs, but in the green funds, it's at least a case that just a certain percentage of the portfolio is actually sustainable. and the rest of the portfolio could actually be very unsustainable. And if you then invest whatever 50,000 euro into that fund, maybe 30,000 goes to the sustainable companies and the remaining 20 to the ones you actually try to avoid to support. So it's a little bit tricky. I'm pretty sure that you can dig into the details and find out how that specific one that you mentioned there also is actually structured and what's behind that ETF, and therefore see if it's worthwhile supporting or not.
I can continue on that. Partly agree, partly disagree. I think that if you invest in companies or ETFs or mutual funds, depends also obviously on your financial situation. So how much you actually have to invest, because obviously, as we all know, diversification is key when it comes to investing. And also, may I just also highlight that definitely not the financial advisor. Take everything I say with a pinch of salt. I think what's important here is that ETFs rarely are properly sustainable, just for the sake that they are built, like Martin said, and mainly social responsible investment or like ESG ETFs are very much based on the exclusion criteria, so they exclude certain type of industry or certain other things out. And then obviously there is mutual funds out there that might be a little bit higher in terms of the management fee, but there's a reason for that, because they are actively choosing assets in the fund that are according to the fund values. So if you have clear values where you want to invest, then mutual fund is one way to go, and there can be more handpicking of assets rather than in an ETF. But when you look into this, the clear thing is to look into the kind of where the fund is actually investing, to look under the hood. So don't just invest in an ETF just says it's SRI and ESG, but actually look what's inside the fund and what's the kind of the target and the strategy of the fund where it's supposed to invest.
Yeah, the same way as you would read the label of the products that you buy to see what that organic cotton shot is actually made of, right? And so on and so forth.
100% polyester.
Okay, we're coming to an end really, and to finish it off, I would like to ask one last question. In terms of investor activism, what, in your opinion, does the year 2021 has in store? What's next?
Many more investments, I would say.
Well, let's surely hope so.
I just hope that the activism will continue, and at least some studies that I saw is that this year, due to the pandemic, it has maybe slowed down a bit. But then again, looking at this ESG, I think there's a lot of potential also in the S, or the social dimension, and I think maybe turning also to the human capital management next year, because we have been worried a lot about health and safety, and also the treatment of employees and layoffs. So I think also looking at this perspective, I saw a study that looking at management solidarity in a way at the moment might come above, and that then relates once again to the compensation that would still be a relevant thing for investors to focus on. And then also I think risk management, what kind of scenarios and preparedness we have for future. And then also the pandemic has brought a lot of questions about inequality, and also gender and race questions. So I think the diversity question is very much relevant, and that also looking at the board elections that I talked about. And I think we are soon coming to the 5th anniversary of the Paris Agreement this week. So I hope and see that also advancing climate change continues to be very much on the agenda, and looking at the target setting that we have discussed and implementation and disclosure. So I would hope and see these at least being on the investor activism agenda going on to the next annual general meeting season.
If I can add my 2 hopes, I know we're a few minutes over, but I think the first one is that there is more active engagement generally around the sustainability topics, especially with companies, because it's obviously key, as we already have made clear here. But there's also a study that I recently read that shows that actually was comparing like 600 US corporations that were actually engaged with, and how they had in 18 months from the engagement overperformed the non-engaged companies by nearly 2%. So it's also a gain opportunity. And secondly, is that we actually start investing. I think Martin was actually saying that Germans, was it 2.5 billion? I think it's actually 2.5 trillion that Germans have on bank accounts. But anyway, it's a huge amount of money. So many zeros that we saw on Kia's presentation that I can't even count. And when we talk about that, maybe individual investor cannot have a huge impact, but if Germans have 2.5 trillion just in cash in bank accounts, and the Frankfurt Stock Exchange market cap last time I checked was 1.7 trillion, that speaks about the kind of the power that we as individuals, households actually have, even on the publicly listed companies, not to even talk about then project finance and so on. So that's the 2 things I'm hoping for: more active sustainable engagement and creating a movement of us all, starting to vote with our money.
Yeah, and I guess as 2020, if it ever showed us anything, is the fact that you just can't sit idle anymore, right? It's time to take action. There's a lot of engagement actually happening. So let's see what 2021 has in store, really. On this note, would like to thank the audience for joining us today. I hope this was useful. You can get in touch with any of us. Visit coolerfuture.com, visit ecoligo.com, join our newsletters with tips from the blogs for more webinars like this. This is something that we do quite occasionally. So sign up to stay tuned. And I'm wishing everybody a very, very lovely evening.
Thank you, everyone.
Thank you, Olga. Thanks, everyone. Thanks to the guests.
Thank you.
Bye.
Bye.
Bye.